Hello everyone. I'm so sorry. I was sort of speaking uh, in the live stream without going live on YouTube. So I have actually covered 12 minutes of the presentation sort of uh, without turning on the live on the YouTube platform. So I'm so sorry for this. Let's just quickly start back again. I hope somebody. Oh, I see that people have left right now. So hello everyone. I'm so sorry. There was a mishap in the stream where I sort of started, but I did not go live on the YouTube platform. But I'm so sorry for this. We'll quickly start back again. I hope some people can join, and let's just continue with this. So, like I was saying, that this time in this particular rebalance update, I will take you through what is happening in the momentum portfolio and what are the changes that we did in the momentum portfolio, and also what are the um, some updates on the market. I was just doing a checking the stream once again because I don't want to go back with that mistake. All right. So yeah, as I was saying that this time we'll discuss the rebalance update, and then I'll give you an overview on the market. So talking about the rebalance, first thing that we have to address is that the momentum portfolio, right, did not have a very good month last month, right? We lagged the market by around 3.5%, and we ended up positive, but it was not a very good month for this particular portfolio. I'll explain to you what happened, and I'll explain to you what we are doing to address this, right? So yeah, we had a correction in the momentum portfolio. We did have a little bit of correction in the portfolio, and it did not go as expected for us, right? So I mean, not all momentum portfolios underperformed this much, but ours had a slightly higher correction, and I will give you an explanation on what happened and what we are doing in this, right? So first thing is that the momentum portfolio, it has given you a very good performance since July, right? Since July we've had an amazing performance in this particular portfolio, and that is because we had these high momentum names like Tata Elxsi, some of your Adani stocks, your India Cement, your India Hotels, which have done really well, but they have ended up becoming a little overvalued, right? And when a stock becomes overvalued, and you have a drastic reaction coming up in the market, that leads to volatility, especially in these overvalued names. So we had Tata Elxsi in our portfolio, which has been a very good IT stock, right? It has been a source of outperformance for our portfolio for a very long time. It has given us, I'll show you the long-term performance that we have received from the stock. But just because of but only in the last month we saw the stock correct very heavily because of the earnings that were given and the prospects that the company announced, which did not look very, very bright. Right. So that was what happened. And because Tata Elxsi has a large stock price, right? So because it has a large stock price, it ends up becoming, a large portion of the portfolio. So not only did we have allocation to Tata Elxsi, we had almost 12 to 15% allocation to a Tata Elxsi in our portfolio. Right. So when that particular stock corrected by 15%, our portfolios were impacted by around 2-3%, which was the overall, lag that we saw from the market. This was a very, very specific event that happened to our portfolio in one particular stock, which we were allocated to. Now, here again, so this is what happened in this particular stock. But why did we not exit it? Because if you look at Tata Elxsi and you compare it with the IT index, you see that Tata Elxsi has been a very robust company all through with during whatever phase the market has gone through. It has been a constant part of our portfolio, which has given a tremendous outperformance, right? If you look at even after correction, it has given a 70% outperformance over the Nifty in the last couple of years. And it was also not as volatile as other companies in the IT sector, which is why we did not exit it sooner. Now, the correction that happened over the 2 days following the earnings. The projections were not very good, and the earnings were also not expected, which led to this correction. And because now the prospects are actually not very bright in the short term, we are taking a leave from the stock. But obviously, we think that it will bounce back once the global technology sector also bounces back. So along with exiting Tata Elxsi, the changes that we are doing in this portfolio in this month are, we are exiting Tata Elxsi, we are exiting another overvalued stocks right now, which is India Cement. India Cement has had a very good run, but it is suffering correction right now, which is why we have, we think that it has become slightly overvalued and we are taking an exit here. We are exiting a couple of names in the Adani universe, right? So we're exiting Adani Green and Adani Transmission. Obviously, both of these stocks have also been a source of huge outperformance in our portfolio over the short term, over the long term. But, given that the Adani stocks have become slightly overvalued and the business group itself has a lot of debt, you have to be careful in the allocation that is given to this particular group in the current market scenario, right? So we have reduced our allocation to Adani Transmission and Adani Green, but ATGL and Adani Enterprises still remain a part of our portfolio. Talking about the additions that have happened in the chemical sector. So we have added solar industry in the commodity chemical sector. We have also added Aegis Chemicals, which is in the oil and gas storage and transfer sector. So what our belief is that right now, even though the global scenario is bad, the domestic cyclical recovery is happening, right? Indian capex has picked up. There is credit growth in the market, right? And the demand is picking up in the consumer sectors, right? Which is why companies in the cyclical sectors like gas distribution, storage, logistics, etc., will also stand to gain a lot from the current market scenario, right? Apart from this, obviously, consumer discretionary is a very strong sector, which is why we have added Blue Star right now. So these are the additions that have happened in the portfolio in the current month. And again, so we don't see a lot of overvaluation in these stocks. And going forward, I expect the performance to be much more robust compared to the last month, because we have exited the biggest culprits like our Tata Elxsi and some of the Adani stocks from the portfolio. So this is how the allocation looked in the last month, right? So in the last month, we had allocation to IT, which was around 14% only because of Tata Elxsi, and your Adani Green and your Adani Transmission also contributed to allocation in the power distribution and generation sector, right? So that is what we have cut in, and some allocation to gas distribution has come in, and chemicals and consumer discretionary has also come in. So if you look at the current allocation, you will see that banks have the highest allocation with Bank of Baroda right now. We have automobile, we have quite a few automobile names right now, TI India, TVS Motor, Tata Motor, etc. We have gas distribution, a couple of things that we added. We have hotels with India Hotel. We have pharma names with Cipla, tobacco with IDC, electronics with Blue Star, etc. So this is a very diversified basket now. with high allocation to your automobile and banks, which are the most shiny industries in the current market scenario. Because of the growth that the auto sector saw in the Diwali season and what the banking sector is seeing right now with the earnings season, I think these two sectors are the best sectors to go with in the current market. If you look at the stock allocation, you will see that we have Bank of Baroda in the banking sector, and we have SBIN in the banking sector as well. We have solar industry in the chemical sector. We have India Hotel in the hotel sector. We have Bharat Electronics in the defense electronics sector. We have Cipla in pharma. We have ATGL and Adani in the gas distribution transmission sector. We have ITC in the FMCG sector. We have Tata Power in the power sector. Solar Finance in the NBFC sector. We have TI India, M&M, Tata Motor and TVS Motor, all these four names in the auto sector. IGL in the gas sector, again, Aegis Chemical again in the gas distribution and transport sector. Blue Star in the electronic sector, SBI Life, again an NBFC, VBL in the FMCG sector. So it's a very diversified basket with some very interesting names which are touted to do well in the current market scenario. Now I will quickly take you guys through, the current market scenario and, which will help explain, what our thinking behind this particular allocation is. So this time, the theme or the topic that is chosen for our market update is no gyan, only data, right? So I think if you guys was watching the news or following any of the digital news apps, there was a lot of gyan that came in during the Diwali season, right? Everybody was telling you the 10-year plan and this plan and that plan, or the long-term benefits of investing. So I think we can take a detox from that and sort of focus only on the data right now, because I think there is a lot of gyan that is already out there, right? So first data point that we want to look at here is that auto sector has had an amazing festive season, right? So if you look at the growth of the auto buying in the festive season, which was from Dussehra to Diwali, right? You will see that it was 30% higher than last year, right? So it is now that the industry has opened, now that after COVID, we are seeing a phase of recovery. People are buying more automobiles, and we saw that the festive buying was 30% higher than last year. During Navratri, we saw 57 jump in buying, and if you look at the overall year for the auto sector has been 20% better than last year. There's a lot of demand already and pending orders that the automobile sector already has, and the supply side issues are also cleaning up. So auto sector is an amazing sector to focus on in this particular market, which is why you will see that auto sector we have 4 auto stocks right now in our particular portfolio. Secondly, banking, we have seen earning and credit growth. We've seen very amazing numbers come out from banking sector. If you look at the credit growth in the economy, you will see that we have grown 5x compared to last year. Obviously, last year was impacted by COVID, but we have seen that recovery happening in the credit in the economy. If you look at the banking profits, right? So all the major banks have posted more than 20 to 70% profits in this earnings season, which is again amazing, which makes these stocks very attractive. Secondly, the net interest income, which is a very important metric to look at when you're evaluating banks, has also grown 20 to 50% in this earnings season. The credit rate has grown at a much rapid pace compared to deposit rate, which is a slight concern. But overall, banking sector is going from strength to strength, and the foreseeable future also remains very strong. When you look at the banking sector, which is also a very good indication for the overall economy. When banking does well, then the whole economy also has a great time. So that is what you will see if you look at the sectoral performance right now. You will see that PSU banks and private banks have taken a lead, and they are the biggest outperformers of the month or the quarter. On the monthly basis, we are followed by autos, financial services, and IT. And on the quarterly basis, metals and auto are among the top sectors, right? So this is as expected, as we saw, banks and autos are the ones with the highest earning, and that is what we're seeing in the price performance as well. Now, I'll briefly go through what's happening in the global economy, right? So in the global economy, if you look at the FANG stocks right now, you will see that a huge correction is happening in all of these stocks. So your Facebook, Amazon, Apple, Google have all corrected, and Facebook actually had a very drastic correction that happened in the last week, right? The price corrected almost 20% during the last week when they gave out their earning numbers. And each of these sectors, each of these stocks, even though they might be in the cloud infrastructure like Amazon or Microsoft, or they might be in the semiconductor sector, or they might be in the social media sector, all of these six sectors have cut down projections, but Apple and Microsoft still have a positive growth rate. The rest of them are actually seeing decline in growth, and we are projecting, are not projecting well in the future, right? So we can see a lot of correction happening in the tech stocks. That is why we've also cut down our tech allocation, because Indian tech is highly dependent on what's happening in the global market. So that is the update on the global tech stock. If you look at the global markets, right? So if you compare the performance in the global market, you will see that Nifty is still the best performing market among all the major global markets, right? Your Dow Jones is down some 9% YTD, whereas Nifty is only down 7%. But yes, what we have seen in the last quarter is that these indices, which have lagged the Nifty by quite a bit, are catching up. So Dow Jones had an amazing month last month, followed by Euro stocks, and Nifty sort of lagged behind. So it is slightly underperforming the global peers while this recovery is happening, because I think Nifty already was not, had not suffered as much as the other markets. What is very interesting to see here is Nifty is drastically better than the emerging markets, right? So Nifty has outperformed the emerging markets by 25%, and which stands and which talks about the growth and the strength that the Indian markets have. So having talked about the broader themes, right? We are worried a little bit about the global tech sector and consequently about the Indian tech sector that is dependent on it, even though the high dollar prices will give a better revenue to the IT sector, right? So we have to be a little careful about it. And what is looking very attractive right now is banking and automobile, right? And not just automobile, but other sectors in the consumer discretionary space, like I said, your electronic sectors, where we have added Blue Star, or we have chemicals, which is gaining from the Europe 1+1 philosophy, and then the cyclical stocks. So there are a few sectors that you are picking up because of the capex boom and the consumer spending that is happening in the economy. So having said that, what do we have to look forward in the next week that we have to watch out for, that will define what will happen in the market, right? So first thing, the most important thing is the Fed rate decision. So I expect that, while the Fed has raised the rate by 75 bips in the last 3 meetings, this meeting they might, slow down. They might actually not raise by 75 basis points. They might actually cut it down to 50 basis points or so, which will again be amazing news for the market, which is really worried about these rate hikes, right? So any cut, any slightly dovish stance by the Fed will be encouraging for the market. We also have a special RBI MPC meeting on the same day, on 3rd, where again RBI is going to discuss, why is the inflation still high in the economy. There will be another set of important numbers that will be coming throughout this week, like the balance of trade, the consumer spending, the industry production. A number of economic numbers will come out about the Indian economy in this week. And then obviously you have all your earnings that are lined up in this week. We are in the earnings season, and we have to watch out for this. So these are the things that we have to watch out for this week. Please start dropping in your questions. I'll stop the presentation here, and we will go back and start taking the audience questions. I am so sorry for being late and all the confusion that was caused. But I hope if people are listening, please ask me any of the questions that you guys might have. So I can see only one question right now, which is by Nilesh Kedkar. He says that I rebalanced a little bit late. And then he said that, can you inform us a day in advance about the rebalance? Uh, so I'm not sure about it. See, typically you can expect from Wright research the rebalance always comes on the first of the month, right? So today was the first of the month, and we saw that rebalance update come in, and that is what you can expect. So going forward in the next month also, if it's not a weekend, you can expect the rebalance to come on the first of the month, and you can be prepared. But I agree with your point. We will start posting on our social media and doing some notifications on Telegram, etc., to make sure that you're informed about the rebalance. So I think most of you guys have left. I'm again so sorry about being a little late about in the stream. And thank you everyone who joined in. Thanks a lot for listening to the rebalance update. Hopefully from the next time we can do a little bit better. Please continue to hold the portfolio, continue investing in the portfolio, because, like I said, the allocations have changed and it should be a much better time for this portfolio going forward. And if you are invested in the balanced multi-factor portfolio, or if you're looking into, a portfolio which gives you a slightly lower risk, you can look at the balanced multi-factor portfolio. And we also have our balanced multi-factor stream coming up at 5 p.m. where people who have invested there can join us. So with this, I'll take you guys leave. And thanks a lot for joining. Do post. I'm sure that some of you missed joining this live stream because of the error that happened initially. But you can, text us anywhere on social media, email us, or contact us in any which way you want. And we'll be very happy to address any questions or queries that you guys may have. Thanks a lot. Thank you for joining. Have a great Tuesday. And happy investing. Keep invested in the right research portfolios. And I expect, we've put in a lot of effort in this rebalance. We've done a lot of research and a lot of analysis, and we expect the portfolio to come back to it outperforming